Hey everyone, welcome back to Corporate Decoder, the place where we try to find the hidden treasure in financial reports. Sometimes it is treasure, sometimes it is, well, let's just say it is a learning experience. Today we're diving into Welsis Corp's quarterly report, and let me tell you, this one's got a few interesting twists. We're going to break down their financial health, figure out what's going on with their business, and see if they're on the right track. Before we dive in, if you like getting these straight answers from official company filings, make sure you hit that subscribe button. And if you want to keep the conversation going and connect with other finance enthusiasts, our Discord community link is in the description below. Alright, so we're looking at Welsis Corp's financial health as of the 31st of December 2025. This is a company that started out trying to do something with online psychological therapy, but then they've made a pretty big pivot. It seems like Welsis Corp has been through a transformation. Back in 2021, they incorporated in Wyoming. Initially, their focus was on teletherapy, connecting people with psychological services online. They even bought a website and a prototype app called Psychologist Negative 24. Now, here is where things get really interesting in March 2024. A big chunk of the company's shares, about 73% in fact, was sold to SkyWest Pinnacle Limited. This basically handed over control. Shortly after that, they announced they were jumping into the cryptocurrency and blockchain business by launching TokenTraders.net, a crypto exchange. So, from therapy to trading digital coins, that is quite a leap. Let's check out their balance sheet. This is like a snapshot of the company's financial position at a specific moment. On the 31st of December 2025, Welsis Corp had total assets of just $1,126. That is a really small number compared to the 30th of September 2025, when they had $2,169 in assets. It looks like their assets have decreased. On the flip side, their liabilities are much higher. Total liabilities were $161,477 as of the 31st of December 2025. That's a significant amount compared to their assets. They have over $152,500 in total liabilities as of the 30th of September 2025. This brings us to the shareholders' deficit. As of the 31st of December 2025, their total shareholders' deficit was a negative $160,351. This means that the company owes more than it owns, and if you were to liquidate everything, there wouldn't be enough to pay back all the shareholders. This is a pretty serious red flag. It's even worse than the deficit of $150,331 they had in September of the same year. Now let's look at their statement of operations, which shows how much money they made or lost over a period. For the 3 months ended the 31st of December 2025, Welsis Corp reported zero revenue. That's right, no income from sales. Their operating expenses were $6,793. This resulted in a loss from operations of $6,793. Adding in their interest expenses of $3,227, their net loss for the quarter was $10,020. Now, let's compare that to the same period in the previous year, ended the 31st of December 2024. Back then, they also had no revenue, but their operating expenses were much higher at $22,244. Their interest expense was $2,012. This led to a net loss of $24,256 for that quarter. So, while they're still losing money, the loss for this quarter is smaller than last year, which might be seen as a slight positive. When we look at net loss per S-hair for the quarter ending the 31st of December 2025, it's basically zero, reported as 0.00. For the same quarter in 2024, it was negative 0.01. Even though the per share loss seems small, remember the company is still operating at a loss overall. The number of weighted average shares outstanding remained the same, at 27,52667 for both periods. The statement of cash flows is crucial because it shows how much cash is actually moving in and out of the company. For the 3 months ended the 31st of December 2025, Welsis Corp used $10,525 in cash from operating activities. This is mainly due to their net loss adjusted for changes in their assets and liabilities. For the same period in 2024, they used $9,289 from operating activities. So they are using more cash in operations this year. Interestingly, their financing activities show a positive cash flow in the 3 months ended the 31st of December 2025. They provided $10,525 through financing activities. This is primarily from the proceeds of issuing convertible notes. The same thing happened in 2024, where they provided $9,289 from financing. It seems like they've been relying on borrowing to keep things going, and the really concerning part is their cash and cash equivalents, beginning and end of period, are both listed as zero for both years. This means they have no cash on hand. Looking at Note 1, it clarifies the company's situation. They are indeed in a development stage. After the cryptocurrency pivot, they announced in September 2024 that they were entering the crypto and blockchain industry with tokentraders.net. This note also confirms the change in control on the 1st of April 2024. When SkyWest Pinnacle Limited took over. This is a really important section. The going concern note, the financial statements are prepared assuming the company will continue to operate. However, here they state that their accumulated deficit of $236,146 at the 31st of December 2025 and negative operating cash flow raised substantial doubt about their ability to continue as a going concern. This is a very serious statement from the company's management. They acknowledge they might not have enough cash to support daily operations and plan to raise more funds through equity-related party loans. And loans from unaffiliated parties via convertible notes. They believe in their strategy but admit there are no guarantees. The ability to keep going depends on implementing their business plan, generating revenue, and successfully raising more money. Let's look at their debts. They have a note payable of $40,000 with a 10% interest rate and a default interest rate of 12%. This note was originally issued in September 2021 for 2 years. As of the 31st of December 2025, they still owe $40,000 on this note, plus accrued interest. And importantly, this note is currently in default. Then there are the convertible notes. These are loans that can be converted into stock. Over the past few years, they've issued several of these notes to unaffiliated parties, mostly for paying operating expenses. As of the 31st of December 2025, the total convertible note payable was $78,417, plus accrued interest. These notes have a 6-year maturity and an 8% interest rate convertible at $0.5 per S-hair. The fact that they are issuing convertible debt to cover operating expenses, combined with the lack of cash, points to a significant funding challenge. Moving on to the management's discussion and analysis. This is where the company's leadership talks about their financial situation in their own words. They reiterate the going concern issue, admitting they expect to need additional capital and plan to raise it through selling equity or debt. When comparing the results, they highlight that the net loss in the 3 months ended the 31st of December 2025 was $10,020. A decrease from the $24,256 net loss in the same period of 2024. They attribute this improvement mostly to lower professional fees. While a smaller loss is better than a bigger one, it's still a loss and the revenue remains at zero. This section discusses their liquidity essentially, their ability to pay their short-term bills. They had a working capital deficiency of $81,934 as of the 31st of December 2025. That's a big negative number, meaning current liabilities are much higher than current assets. This deficiency actually improved slightly from $82,439 in September 2024, mainly due to a decrease in accounts payable. But the key takeaway here is they have a significant working capital shortfall. And here it is in black and white as at the 31st of December 2025, our company had no cash. This is a critical piece of information. No cash means they are entirely reliant on external funding to operate, and even to pay for their minimal expenses. The cash flow from operations really tells the story of a company's ability to generate cash from its core business. Welsis Corp has not generated positive cash flow from operating activities. In the quarter ending the 31st of December 2025, they used $10,525 in operating cash, and in the same quarter of 2024, they used $9,289. This trend of using cash to operate without generating any revenue is a major concern. The cash provided by financing activities for the quarter ending the 31st of December 2025 was $10,525. This comes from issuing convertible notes. So to cover their operating losses, they are borrowing money, usually by issuing debt that can be turned into stock. This is a common strategy for companies in financial difficulty, but it can lead to dilution for existing shareholders down the line. The plan of operation section confirms their dire need for funding. They explicitly state that existing working capital further advances, and debt instruments are expected to fund operations for only the next 3 months. They have no lines of credit and no bank financing. Operations have been funded by private placements of equity and debt. They anticipate increased operating expenses related to inventory acquisition, development, and marketing, which they plan to finance with more issuances of securities and debt. Crucially, they admit they will have to raise additional funds in the next 12 months to sustain and expand. They don't have a specific plan for this funding, but anticipate equity financing. They also mention seeking short-term loans from directors, though no future arrangements are confirmed. They simply do not have any agreements in place for future equity financing. Finally, let's touch on controls and procedures. Management, including the CEO, evaluated the effectiveness of their disclosure controls and procedures. They concluded that these controls were not effective, meaning that the information required to be disclosed to the SEC might not be recorded, processed, or reported within the necessary timeframes. This lack of effective controls, especially in a company facing such significant financial challenges, is worrying. So, what's my take on Welsis Corp based on this filing? This company is in a very precarious position. They have a substantial shareholder deficit, zero revenue, and a critical lack of cash, forcing them to rely entirely on debt to cover even minimal operating expenses. The acknowledgement of the going concern issue by management is a serious warning sign, indicating they might not be able to continue operating as a business. The pivot from teletherapy to cryptocurrency trading is a bold move, but without any revenue generated from this new venture yet, it feels more like a desperate attempt to find a lifeline rather than a clearly defined strategy with a path to profitability. The fact that they have no cash on hand and no concrete plan for future funding is alarming. Their operational expenses are low, but even these cannot be covered by their own business, pushing them further into debt. The ineffective controls suggest a lack of proper financial management, which doesn't inspire confidence. The main risk here is obvious. The company could run out of money and cease to exist. The opportunity, if there is one, would be the success of their cryptocurrency exchange. TokenTraders.net. However, the market for crypto exchanges is highly competitive, and there is no indication of them gaining any traction yet. In conclusion, Welsis Corp appears to be a company struggling severely for survival. While they haven't shut down yet, the financial indicators are very negative. Investors should be extremely cautious, as the company is heavily dependent on external financing with no clear plan or immediate prospects for revenue generation. Alright, that is our breakdown of Welsis Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching, see you next time.